Want to talk more about the issue of volatility and what has happened with the VIX futures curve. Stuart Kaiser is joining us now. He's UBS Head of Equity Derivatives Research. Stuart, it's good to see you as well. It's been a while.
Yeah, it's great to see you. Thanks for having me back.
Yeah, of course. So as we have seen a lot of volatility in overall equity prices, index prices, right? We have seen the VIX futures curve show that people are still a little nervous out there, even on days when we see a rally. Talk us through what's been going on.
Yeah, and I think, thanks very much. I think last week, really showed that, very, very clearly when we had the sell-off in the equity market on Thursday. Clearly the VIX itself moved substantially higher. But the rest of the curve not only moved higher, but it moved probably 2 to 4 points higher than we would have expected it to. So, the term structure is going to tell you a little bit about how much risk the market expects and when they expect that risk to materialize. And what we're seeing today is that the market, even as things calm down in the front end, is really still concerned about the election and the growth outlook, call it 3 to 6 months out from now. And if you were to just say, where is the VIX term structure today versus where was it when the VIX was at 82 in March? Well, from 5 months on out, it's at the exact same place. So really what the market is telling you is the degree of uncertainty about how this recovery is going to look is almost as high now as it was when the markets were at their lows.
Hey, Stuart, so help us understand, when Powell talked about the fact that the Federal Reserve's balance sheet was at over $7 trillion and they're prepared to grow that, does the market just dismiss that now altogether for the short-term gain of, funds being flooded in?
Yeah, I think they sort of went in stages. And I think, the first stage of the crisis was one, as was touched on earlier, about market functioning. And the Fed was able to attack that with a massive amount of liquidity. Right. And then we had that stage in the middle where it was virus curves and how bad do those look. Now we're into the last bit, which is more about, is the economy going to reaccelerate, which I think we've largely seen. But then what's going to happen in terms of how long will that recovery take and where will we settle relative to economic capacity? And if the market's worried about that, they're going to sort of ignore the balance sheet for a while. The growth of the balance sheet could be seen as a necessary evil until the degree of uncertainty about that, let's call it 6 to 12 month outlook, gets under better control.
Stuart, it's Brian Chung. I want to shift gears a little bit to the retail investing trends. That seems to have been a hot topic. Now, a lot of people on Robinhood have been interested in options trading. I'm wondering to what degree you've seen that as an impact in derivatives markets. Do you think it's substantial enough? Have you seen certain dynamics and pricing change as a result of those trends?
Yeah, we've definitely seen it at the single stock volatility level. We won't so much see it at the VIX or at the index level, but stocks and sectors you might. And I think where you've seen it, frankly, is that, traditionally put implied volatility is well above call implied volatility. People are willing to pay a premium for protection. In a lot of these very popular retail stocks, a lot of that premium is gone. And what that suggests, I think, is that retail investors are very bullish on the stocks you're talking about, and they are buying call options. And that sort of pushed the call options higher relative to puts. So essentially what you've seen in those names is just a very bullish impact on both the share price and on the way that volatility has been priced in those names.
Paul?
Stuart, given that some of the VIX products effectively give you, 4, 5, 6 times the S&P exposure in a given day, do you think these products are for the average investor who, as Brian mentioned, is trading on Robinhood today?
Yeah, I think if you're talking about like the levered VIX ETFs and things like that, obviously they've been approved by regulators. So the powers at large have determined that they're appropriate. I think, look, there's a lot of risk embedded in the VIX is a 100 volatility asset, right? So if you're going to add leverage on top of a 100 volatility asset, you're creating a very challenging risk profile. And, I'm not going to speak to what a specific investor should do, but I think if you're going to be using those products, you need to understand that you're taking a 100 volatility asset and you're adding more leverage on top of that. So they're I don't want to use any pejorative words. I would just say that they're tricky investments to use. And I think it's very important that if someone's using them, you need to kind of understand what the risk reward profile on them is, because they can move. I guess is the best way to put it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.